Though, I mean, let's put this in perspective also. The stock is down for a reason, partly because there's a fear of a possible capital raise that has to happen down the line.
Yeah.
They may have to issue more stock, raise more money, and that's going to dilute existing shareholders. Are you concerned about that aspect of Tesla, that they are burning through cash and that they need to raise more, and that could put pressure on the stock?
Well, I believe that's in the stock.
Or would you welcome that?
Exactly.
Is really a question I have, because what I wonder is why this is a company who has enormous cash burn and an enormous opportunity. This is the $1 trillion idea with $1 trillion worth of issues around it.
Yeah.
And I would be out there raising money tomorrow. Can the company not raise money?
Sure. Oh, it can raise money. I don't think Elon wants to do it at this valuation. I think he thought, and the company thought, that their autonomy day last week was going to give them a nice opportunity, that once analysts understood how far ahead of the competition they are, whether it's Waymo or Cruise, in terms of autonomy, and how soon it is going to evolve, and that they would be able to raise. What happened last week came clear to me is the analysts following this stock don't know how to analyze it, because it's not a technology stock. It is that. It's not a car company. Yes, it is. Battery. It's utility. It's something for everyone, and no one can pull it all together. We have set out our research teams. We have broken them out not by sector, but by innovation platform. So we have a robotics, autonomous vehicles or robots. Energy storage, they will be electric. Artificial intelligence, they will be powered by artificial intelligence. Transportation as a service, we have 4 analysts collaborating on this. I don't think research departments out there are set up to analyze this stock. There is an amazing inefficiency in this stock. It is our highest conviction idea for a reason.
So let's do this. Tim, you as a manager and a former long-short portfolio manager have traded around positions, trimmed, added to, that sort of thing. Is it fair to say, Cathie, at ARK Invest, that just because Tesla is your top holding, that you just hold it there, or are you constantly managing around that position in and out?
So disruptive innovation is characterized by controversy and volatility. And so we know we're going to get opportunities to buy stocks. We lie in wait for those opportunities. Many people think of, because of what we do, disruptive innovation, that we're momentum driven. Absolutely not. We lie in wait. So if you just take Tesla alone, 2018, you're right, the roller coaster. If you take away the performance of the stock, which was up last year, just take that away and just look at what happened, what we delivered in alpha because of our trading around controversy. We delivered 175 basis points just from Tesla. And we get opportunities like that throughout the portfolio.
And I think that's impressive. And I think that's kind of a manager that I would want to be tactically, along with a fundamental view, invested with. I would push back on that volatility. First of all, congrats for laying in the weeds and buying stuff cheap, and that it's been proven out this year in your portfolio. But I look at a stock like Tesla, and over a 5-year period, the stock's done nothing, with being one of the most volatile stocks in the world, at least of the mega cap stocks. So I look at, and I could cherry pick numbers, but I could say, really off the high of 2014, you're down 20% by holding Tesla for 5 years when supposedly it had a huge competitive advantage. Yeah. There was no competitors in their space.
Right.
It was being priced as a technology company. And the stock really at a point where now it looks like there's some balance sheet issues. The competition's never been heavier, although I think you'll push back on that. I think I appreciate your argument, which is that they're not an auto company. They're not a tech company.
But even more, just let's take the electric vehicle. The Model S, 2012 it was launched.
Yep.
Not one of those competitors is anywhere near it. We're 7 years later. Now let me take your other point. This trading around, this trading range, you as a trader and investor, but as a trader also, understand that when you build a base like that, one of two things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe it's going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout.
Tesla is at a crossroads right now. The stock is moving, analysts are divided, and the company's future is under the microscope. In the next 5 minutes, I'm going to break down exactly what's shaking up Tesla stock today, what's driving the moves, and what you need to know right now. Right out of the gate, Tesla's stock has been under pressure this week as investors digest some major headlines. Shares have slipped partly in response to a downgrade from Morgan Stanley. That's the first time in 2 years the firm has taken this stance, and analysts pointed toward valuation concerns and weaker expectations for vehicle deliveries next year. Now, that downgrade wasn't all doom and gloom. Morgan Stanley actually raised its price targets slightly, but the broader tone is cautious. The firm thinks Tesla's electric vehicle demand is cooling, competition is ramping up globally, and the stock may already reflect much of the company's innovation potential in self-driving and robotics. At the same time, U.S. auto sales data just came out showing Tesla's U.S. deliveries fell to their lowest November level in nearly 4 years. Despite launching more affordable Model Y and Model 3 variants, total sales were down sharply. Analysts blamed weak consumer demand and stiff competition from other brands for some of that drop. This sales slump is headline-worthy because it suggests that price cuts and cheaper models alone aren't enough to revive short-term demand. That's putting extra pressure on the stock as investors start to ask whether Tesla needs fresh products or a new growth catalyst. Meanwhile, Tesla CEO Elon Musk is pushing forward with ambitious self-driving goals. Musk reaffirmed plans that Tesla will soon remove safety monitors from robotaxis in Austin, marking a major step toward a fully autonomous ride-hailing service. That's exactly the kind of long-term innovation investors want. But there's a catch. Not all analysts are convinced Tesla's self-driving tech is ready for prime time. Some Wall Street firms highlight safety, regulatory hurdles, and competition from other autonomous players as significant near-term risks. Even when cars underperform, Tesla has multiple lanes to win in the future. A major moment this month was Morgan Stanley downgrading Tesla for the first time in 2 years. They shifted from buy to hold, signaling that Tesla's valuation may already be pricing in future dreams, robotaxis, AI, and robotics, before those ideas have truly materialized. They also expect 2026 vehicle deliveries to be lower than previously predicted. It doesn't mean Tesla isn't innovative. It just means the stock might not have as much upside in the short term as Wall Street once believed. So what happens next? There are 2 possible paths. In the bearish scenario, global EV demand stays weak, competition intensifies, margins stay tight, and Tesla continues to struggle. The big bets, full self-driving, robotics, robo-taxis, take time. And if Tesla can't deliver soon, valuation could take a hit. But in the bullish scenario, Tesla leverages its strength in China and continues expanding energy, software, and robotics. Any breakthrough in autonomy or robotics could reignite growth and push the stock back upward. For now, here are 3 things to watch. First, global EV demand trends, especially in the US and Europe. If they get worse, Tesla will feel it immediately. Second, Tesla's non-car businesses. Energy, software, and robotics could become the company's safety net if vehicle sales stay weak. Third, regulatory updates around self-driving and AI. One approval or one setback could drastically shift Tesla's future. Tesla is at a crossroads. The ride ahead could be bumpy, or it could be the setup for a major comeback. Only time and execution will tell. Thanks for watching, and stay tuned for more updates.